All right, it's been a while since I made a video. I forgot the thing is here. I'm back in Atlanta. I just got done trading. I won't say for the day, but at least for the next few hours. Um, anyways, I decided I wanted to look at a trading video. This is called "The Ugly History of the Trading Industry." It is 7:16, so I have till 9 to make videos. So, sorry about the chair. It's a little squeaky, but hopefully you guys enjoy this video and I start making more videos again. I wasn't picking my nose, it just had a little itch. Anyways, let's get into the video. The ugly history of the trading industry. Money is, you know what? Actually, let's bring up the guys. Forget all these things. Let's bring up the guy's channel. Garland Trader. So I already subscribed to him. I don't remember when I subscribed. And I would like the video. Hope that algorithm provide more trading content. But anyways, this video is the ugly history of the trading industry. I think I said that like 3 times already. But anyways, it's gonna take me a while to get used to this again. So let's get into it.
Evil, then that building is held.
The stock market crash has come, and the Great Depression has begun.
Stock market goes, so goes the wealth and the health of the American economy.
Stock market has gained almost $3 trillion in value since the election.
Trading changed my life.
Day trading is a scam.
I have been trading for over a decade now.
I was able to make multiple $1 million. Now I've retired my family.
And the really rich guys, they don't make their money from crypto.
Ah, shit. How the fuck did we get here? Trading. It's one of the world's oldest professions, right up there with farming, blacksmithing, and, well, let's just say another profession that's been around since the dawn of time. But here's the thing, trading isn't really just about numbers on a screen. It's power, it's influence, and its history in motion. But before we had billion-dollar hedge funds, Wall Street suits, or crypto bros with laser eyes on Twitter, trading was as simple as swapping a bag of wheat.
I think I mentioned this in a video. I think it was like 2 or 3 months ago when I was talking about, or maybe it was an article I wrote. I can't remember. It's been a while, but when it comes to being a trader, it's just like you're trying to find things at a cheaper price than actual true value of it that you could I don't know if I'm putting that right, but anyways, when it comes to trading, you're just trying to find things that you could buy cheap and then sell for a higher price. And in modern day trading, you're selling things at a higher price that you could buy back at a lower price. Yeah. Yeah, it kind of sounds weird when you talk about it, but that's how it is. But anyways, I like the old way of trading, and like being a merchant and all that type of stuff. It's so interesting to me. I think if I got stuck back in time, I would try and be a merchant and do something and have like a store or something. But it's weird because I say that now, but it's not what I do, because I could have a store or something. Anyways, I'm going to ramble on, and this is going to end up being a way longer video than it needs to be.
For a couple goats. And this was just value for value. Before banks, before money as we know it today. So fast forward a few centuries, and trading is now the battleground for wealth, corruption, and opportunity. From big banks controlling the markets to hedge funds now running billion-dollar plays. And now we've got TikTok traders showing off their P&Ls on a daily basis as well. But how did we get here? Trading wasn't born in Wall Street or even in a shady Forex Telegram group. It started with bartering. People trading cows for grains and gold for spices. No leverage, no indicators, just raw deal making. And then came the first official markets. This is
him saying this makes me wonder, like, when was the first ever bank? Just like complete bank. Now I know back in the old days they used to use like there really wasn't any real banks, I don't believe. I believe it was just like the king, and then the king had like a treasury, and then like people just had to pay taxes to the king. I think that's how it went. But now this sounds like that's it's like now this has me interested to see like what was the first bank. Now I know there's always been money lenders and stuff like that, which could probably be considered like bankers or banks. but it's like I don't know if they were actually like a true like bank, even though they were lending money. It was just like they were just letting people borrow money, and I don't even know if they know they had to charge them interest, but I think there's like certain religions that didn't allow for interest to accrue or something. I think it might be like Muslims or Islam. And I think Christianity was like that too at one point, and then I think that's why Jewish people would handle money. I think that's how it went, but I don't think Jews. Now, if I say Jews, don't try and think that like this is me being racist or anti-Semitic or anything. I'm just saying like we call them Jews. I think Jews can't charge another Jew interest. Now, if me saying Jew offends you or whatever, just let me know in the comments like what's the correct terminology. Anyways, makes me wonder like what was the first bank?
Is ancient Rome.
Man, who came up with the first market? Like that's something that's even crazier too. Is like who came up with the idea that like, man, like, you know, John over here sells oranges and, you know, Bill over there sells, and these names weren't back then. Like, I don't know what the first language was. But they were probably just like, you know, Bill. Anyways, I'm going too in depth with this. But when Bill sells oranges, Jack sells apples. Julius over there sells furs, and then like we should just all come together in just one spot so people could just come to this one spot. But then the thing is like even if they had that one spot, how did they get the name out? You know what I'm saying? Like, man, I'm a little amped up because I already been trading this morning, but we have to do a lot of research, and this is going to be an interesting channel. So I hope you guys like, comment, and subscribe. Turn on post notifications. You feel me?
The Silk Road, and early merchant ships as well. This was trading in its purest form. Supply, demand, and please don't rob me while I travel across the ocean. Then came the Dutch, bringing with them a revolutionary concept, the first real stock market. And it was the early 1600s. The world was expanding through trade. The Dutch were dominating global commerce with their massive shipping networks. But funding these voyages were risky. Enter the Dutch East India Company. This was one of the world's first multinational corporations. Instead of relying on the government or a few wealthy backers, they had something totally new. They sold shares of their company to the public. This meant that everyday people, not just merchants or aristocrats, could own a piece of the trading empire, all without stepping foot on any of their ships. So what exactly is...
Okay, so hear me out with this. With the first people who weren't merchants, aristocrats, or, you know, in the hierarchy or whatever, were they saying that this stock is a scam? You see what I'm saying? Like, you know how everybody talks about like crypto being a scam, like, you know, crypto being a scam, or like other things that are like pretty much new being a scam. Like, I think crypto is probably like the best terminology, like, I guess, industry that I can say that people would probably consider a scam. Or like, I don't really think AI is like, I've never heard somebody say AI is a scam, but I know people scam with AI. But it makes me wonder, like, because I remember when crypto first came out, like, I didn't even know how to buy it. Like, I heard people talking about it, but I didn't even know how to buy it. And I heard that it was a scam because everybody was going through like these shady brokers or whatever, and then they were just running off with their money. But this is like before the whole not your I can't think of the term right now, but it's like not your keys, not your coin. That's it. It's something like that. I can't think of it off the top of my head. But anyways, anyway, I digress. Let's get back into the video. But I do wonder if the first people who heard of the Dutch Indian company shares thought that it was a scam, and they were just like, this is how they get you. Because I think, you know, like, that's just probably how they were thinking back then. Like, they never heard of stock or anything like that before.
Is a stock market then? At its core, it's a system that allows people to buy and sell ownership stakes or stocks in companies. The Dutch created the first centralized stock exchange in Amsterdam, where traders could buy and sell their shares. But of course, investing comes with risk. If the company failed, shareholders lost their money, a lesson that some early investors learned the hard way. This new system was a game changer because it allowed companies to take on ambitious projects without putting all the financial burden on a single entity. It also introduced speculation as people started buying shares not just on ownership, but in the hopes that the value would increase. This shift from trading goods to trading the idea of future success was the birth of modern investing. And then came Wall Street. In 1792, a bunch of wealthy traders signed the Buttonwood Agreement, creating what would then become the New York Stock Exchange, or the NYSE. From here on out, it was stocks, bonds, financial instruments on a massive scale. The 20th century saw the rise of big banks, investment firms, and institutional investors. The guys in suits, the ones that made the rules, they control everything from stock prices to entire economies. JP Morgan, Goldman Sachs, Lehman Brothers, these weren't just companies, they were empires. And that, with great power, comes great stupidity. In 1929, everything crashed. The stock market completely collapses, everyone and their mother goes completely broke overnight. Now let's fast forward to the two.
This is an interesting thing. I'll do a video on this as well. I didn't know that a lot of black people weren't even affected by the Great Depression because of they couldn't have money in a majority of those banks that were affected. So a lot of black people, I think it was, I don't know if it was Ford or Chevrolet or something like that, but they said like black people saved, it was one car company back then because of the fact that they had money even during the Great Depression. And I was completely surprised with that. And then you kind of had their own like little ecosystem and economy going on because it was just a majority of it was just black people exchanging money with other black people and other black businesses. So I thought that was really interesting. But I digress.
2000s, when the housing market in the US was booming, buying a house seemed like the safest thing ever. Prices kept rising and banks were giving out home loans to almost anyone, even people who had no stable income or no savings. These risky loans were called subprime mortgages, basically just meaning really bad quality loans. Now, big banks packaged these risky loans into investments and sold them to other banks, investors, and even retirement funds. But there was one huge problem. People couldn't actually afford these homes. And when they started defaulting on their loans, failing to pay them back basically, the entire system collapsed like a house of cards. One of the biggest investment banks at the time, the Lehman Brothers, had made a huge bet on these risky mortgages. And when the housing market collapsed, they lost everything and went bankrupt in 2008. This was one of the biggest financial collapses in history. The economy went into a deep recession and millions of people lost their jobs and homes. So who got hurt and who got saved? Here's the crazy part. Regular people lost everything, but the big banks got bailed out. The US government stepped in and used taxpayer money to rescue these banks because they were considered too big to fail. This then angered the public because it felt like Wall Street caused the crash but didn't actually face the consequences. Ordinary people did. People were furious. Protests broke out across the US, especially in New York, all under a movement called Occupy Wall Street. Protesters believed that the financial system was rigged in favor of the rich, and they wanted a stricter regulation to stop big banks from.
This is now, I'm not a super finance person or like know everything about economics and finance. So I've always wondered like if the United States government decided to bail out people rather than banks, it would have still been an issue in my opinion, because if the banks failed, like where would people have their money even to begin with? You see what I'm saying? Like it might have been like little community banks would have probably stayed as like, I don't even think the little community banks would have stayed open either. And I know that like one of the reasons why we have the Federal Reserve, or at least in what I think, you know, I'm not saying that this is for 100% certain thing, but I just remember like reading about bank runs like 100 years ago and stuff like that. Like when people, like everybody would pull their money out of the bank, and then banks would just go out of business. And I mean, those type of things still happen. It's not as often as it used to be, but I wonder like if the government didn't bail out the banks, what would have happened in 2008? Like where would people have put their money? Because you know, everybody uses a credit card or a debit card and stuff like that. And if there's no money in the bank, or there are no banks, or there's just like one or two banks, then you kind of have like a monopoly issue. I mean, I'm kind of going out there all over the place with this, but I'm curious what would have happened if the government I don't even see how you could bail out the people. Because I mean, the Fed did lower interest rates, which is technically bailing out the people to try and stimulate the economy. But you know, I'm not saying it was the right thing to do. But I'm just curious, like, what would have happened if the opposite happened?
I'm taking such dangerous risks again. This movement changed how people.
Also, I think with like the 2008 crash, it was interesting from my point of view because of the fact that people were blaming banks, but then people weren't blaming like homeowners that took on debt that they knew they wouldn't be able to do. And I mean, the thing still happens today. Like when people do like these adjustable rate mortgages, I'm like, in my opinion, it's like the person's fault. But then it's like, how can I also blame the person if they don't understand finance to know that, yeah, I'm buying a house. Let's just say you're paying $3,000 a month in your mortgage for a house, and then like at, you know, interest rates at that point are like 2%, but then all of a sudden like interest rates to 6%, and then I can't do math like that, but let's just say that your mortgage ends up going up to like $7,000 a month, and you're just like, oh, I can't even keep up with this. Like it's taking my whole paycheck just to pay the mortgage. You know what I'm saying? Like in my opinion, like when you have that like a fixed rate mortgage, yeah, it might be like an extra $1,000 a month, but it's like you have that security to know that, yeah, I'm paying this $4,000 regardless of whatever the interest rates do. And I personally, I do not agree with adjustable rate mortgages at all. Like people in real estate are like real estate agents. I can't even think of real estate agents, but real estate agents will say that like, oh no, like sometimes you got to get a little creative with the financing to help the person get in the house or the house they want. And also, I'm like, sometimes people don't need the house they want. You know what I'm saying? Like, just because it's like you're like kicking the can down the road for a bad event to eventually happen, because rates are always going to eventually go up. Whenever the economy is doing too well, the Federal Reserve is going to raise rates. I mean, and then it's like you kind of want them to too, because it's like, would you rather deal with a cheaper mortgage, or would you rather deal with inflation? You see what I'm saying? Like, and then some people don't even care about inflation. You know, I'm going crazy like this. I could kind of go down a whole rabbit hole on this stuff, but you know, it's because it's like when you have inflation, it's like it sucks for people when they have to go buy groceries. But if you benefit from inflation, like your house value goes up during inflation, like if you own stocks or equities or land or any asset, usually it's going to go up during inflation. You know what I'm saying? I mean, like a lot of people can benefit from inflation, but the thing is the majority of people don't. So it's kind of, anyways, man, let's get back into this video, because this thing is already probably like 20 minutes.
Saw trading and investing. It also played a huge role in why retail traders, regular people, started looking for ways to take back control, leading to the rise of online trading platforms and retail investor movement that we see today. Yeah.
Okay, so let me tell you the reason why I trade. I am a piece of shit. I'm a horrible person. And I'm not saying that like I'm like evil or anything like that, but I'm just saying that like I've never wanted it to be like, I've always wanted freedom to say whatever I want, to do whatever I want. And I've never wanted somebody to be like, oh, I don't like Eon's opinion on this, so we're gonna what's that word, people, we're gonna cancel him. You know what I'm saying? It's like, if somebody cancels me, I tell them, fuck you, dog. Like, fuck you. Like I hate people like that. I never wanted to be a person who was in need of or like who like my way of life or like my view on things could be altered based off people wanting to like try and cancel my business or try and dox me or anything like that. You know what I'm saying? Like I view trading as that because, you know, I've always wanted to make a lot of money. And I thought like I still want to do business and like real estate and all that stuff, but it's like, let's just say, for instance, like I say something that people don't like and I own a business, they could dox my website or dox my personal information or say we're not going to support your business anymore because of what you said about this person or what you said about that thing or whatever, or your views on this or that. And then, you know, then I'm struggling and I'm like, man, my business is failing. I can't pay my employees. My employees are leaving because I can't pay them, or I lose my house or my car or my family because, just because I had a view on something. And there would probably be some people that had the similar view as me, but were they customers of mine? You know what I'm saying? Or were they like are they putting the bread back in my pocket? You know, bread, I mean money. But like with trading, it's just like, you know, I could sit on this computer and trade and make money or lose money. You know what I'm saying? But it's like at the end of the day, it's me. And I don't think anybody could stop me except for myself. But I mean, who knows? Maybe like one day I'll say something that's just so like deranged that like brokers are just like, nah, we can't take your business. You know what I'm saying? Like even if I said it like if I set up like 16 offshore companies and then like got somebody else to open the account and I'm the one trading it, they're like, nah. This looks familiar to what we've seen before. and they, like, I don't know. But anyways, that's the reason why I wanted to trade.
Yes, the birth of I'm also a trader now phase. Now, in ancient times, trading was entirely physical. You had to be at a marketplace dealing directly with other people. If you wanted to trade gold, silk, or spices, you'd have to actually physically travel to another city or country. Only rich merchants had access to long distance trade. And this was because they could obviously afford ships, caravans, and storage as well. Even as stock markets developed, trading was reserved for the elite. If you weren't a rich banker, a business owner, or a stockbroker working on Wall Street, you had no chance of participating in the stock market. But today, anyone with an internet connection can actually trade. So let's break down.
I'll say this also, like I had a mentor, he grew up in Chicago. I've had some in New York as well, but you know, I think a majority of my mentors who trade like the financial products that I trade were in Chicago. And when I think back on it, it's like my dad wanted to do trading and stuff like that, but that was like I think it was like in the 80s. And you know, unless you're like in those major hubs, like trading back in the day was a lot more difficult. Like you had to look at a newspaper or like, you know, I think they sent these things where, and then like people are just mostly trading on the daily charts because the commissions were so high. I didn't even know that, like, you know, now you have 0% or I can't not say 0%, but $0 commissions, or like there's no commission, but you just pay the higher spread. But like back in the day, it was like $100 just to place a trade, and I'm like, that is crazy. I mean, like it. Anyways, I'm gonna go on the whole tangent, but in my opinion, it's like now it is a lot easier to trade. Like as long as you have a computer and internet, you can trade from anywhere, or even a phone. But like back in the day, it's like unless you were living in one of these centers that had like an actual stock market or something like that, or like somewhere where you can like they used to call, I know in reminiscence, I'm butchering the word anyways, reminiscence of a stock operator about Jesse Livermore, or at least Jesse Livermore, because they don't say it's actually Jesse Livermore, so I had to put the quotes. But I think he was like in Boston or Philadelphia or something like that, and they had like a little bucket shop where he was able to trade. But it's like if you didn't have things like that in your city or town, even if you knew that you could potentially make money trading, it's like there's always things that are going against you. Anyways,
how that happened. Before the 2000s, if you wanted to trade stocks, you needed a stockbroker to place trades for you, a special trading license, and
I never heard of the special trading license. I've never heard of that. Oh, maybe he's talking about like the series, like a Series 7 or Series 6 or something like that, or Series 3, and those type of licenses. I don't know, but I don't think you needed that even back then. Like I've heard of people. You know what? I think you did. I don't know.
A lot of money. And this changed when online
You didn't need a lot of money. Like there's been people who made a ton of money that started with nothing. I know that for sure. But you had to be like on the floor for sure.
trading platforms like Thinkorswim and MetaTrader 4.
Or I won't say you had to be on the floor, but the likelihood of you succeeding with a little bit of money was higher if you were on the floor. Like in the 80s and like 70s and 80s and stuff like that. I think the 90s is kind of when things really started to change, because, you know, people had computers in the 90s.
Allowed people to trade from their computers. But in my opinion, the real revolution came when Robinhood launched in 2013. You see,
I don't agree with him on that.
Robinhood did something that no one else had done before. It introduced commission-free trading. Before that, every time you bought or sold a stock, you'd have to pay a fee. But Robinhood made it so that anyone, even with just $50, could buy stocks for free on their phone. This honestly changed everything. Millions of people who had never traded before jumped into the stock market. And other apps like eToro and Webull followed.
I think what changed when it came to trade, because I started trading in 2008 or 2009. I think I had entrepreneurship class my freshman year, and I had already, like, you know, my dad bought me stock here and there, like when I was a little kid. Like I had Disney stock when I was like 5 or 4 or something like that, because I used to love Disney. And like other little things here and there. But actually, like really doing my own research and all that stuff was like 2008, 2009. And I was in entrepreneurship class. We had a demo account and all that stuff. I was like, I didn't even know you could do these. You know what I'm saying? So then I ended up making money doing that. And then that's what kind of got me interested. But I will tell you this. I think the evolution of what really got people interested in trading was COVID. Because people were just stuck at home, not working. They had time to look at charts or like to do research. And, you know, you had a lot of these traders like buying ads and stuff like that. And, you know, debt was cheap at the time. So, you know, I mean, like a lot of people who had these trading courses were probably buying a whole bunch of ads, and people were just scrolling on Instagram or Facebook or YouTube or whatever. And then seeing these trading apps, ads. And then also we had low rates. So, you know, everybody's, you know, markets were moving up, you know, Tesla going crazy, Palantir going crazy, Apple, Microsoft going crazy, crypto going crazy. People, you know, articles being written about, oh yeah, this guy turned $10 into $16 million off a meme coin or something like that. You know what I'm saying? So I think those type of things really got people interested in trading, because I remember when I first started trading, man, I was getting scammed left, right, and center. You know what I'm saying? Like, it was just like chat rooms with people talking about like trades. But one of the things I will say is a lot of, like, in my opinion, it was a lot more pure to an extent, because you knew that these people were like also trying to actively learn how to trade. And there was like some little things where people were scamming or like still doing like the stuff that you see here nowadays, with like people selling courses for like 50, like I won't say $50 million, but like $5 grand or $500. That's what I want to say. $500 or $5 grand and stuff like that. And it's like the most basic thing. Like you could read a book. I could show you a book that could teach you the basics of trading for $50. You know what I'm saying? It's like, or even if you just go online and look at the basics, but it's like people see these Lamborghinis and stuff. I'm going to hold off on that, because you're probably going to talk about it in the video. I'm actually going to stop this video halfway, and it's just going to be a part 1 and part 2.
Making it even easier to trade. Now, for the very first time in history, an average person could open a stock trading account in minutes, start trading with as little as $10. They can also use leverage, which is like borrowed money, so that you can make bigger trades. And you could even...
It's not, you know, we're going to keep with it, borrow money, but it's margin. You know what I'm saying? Like, yeah, you're borrowing it from your broker, but there's so many rules and regulations, at least in the US, that come with margin trading.
Even trade from anywhere.
If you're watching this video in the future, like my great grandkids or something like that, is there margin? Is margin still a thing in your time? You know, like, They charge you a lot of money for margin, so I'm curious if you guys still have to deal with all that.
In the world, even from like a coffee shop. And then, my friends, came the rise of prop firms. Now, in the old days, if you wanted to trade big amounts of money, you needed to have a lot of capital. But not everyone has the funds.
Okay, prop firms have been away, like, around forever. You know what I mean? Like, people were always looking for traders that could, you know, get alpha or have an edge or whatever, and then they would give them capital. You know what I mean? Of course, it's like they're going to charge. I think back then they used to charge you a lot more too. Like, you had to pay for data from your prop firm. Like, even if you wanted to use like something else, like a different system or whatever. Like, let's say you went to a prop firm and you wanted to use Bloomberg. I don't think they would let you use Bloomberg. I think you had to use, now you could have a Bloomberg and then also use their stuff, but if you worked for a prop firm or you traded for a prop firm, you had to use their system to place your trades on. And it was just another way for the prop firm to make money. But I think one of the things now with like prop firms is like prop firms aren't like the old model. They're just like, you have to pass this evaluation and then you're not even trading live capital. You're trading demo. And then they're paying you out with other people's money. It's a Ponzi scheme, in my opinion. You know, I mean, I'm gonna trade it. You know, I'm saying it's money, but I mean, like, it's a Ponzi scheme, in my opinion. You know, you're taking money from the people that pay for these evaluations and fail them, and then you're paying out the money from the people that fail and giving it to the people that, you know, made money trading. You know, it's crazy, but I mean, like, I'm curious how long it's gonna last.
To trade stocks.
You know, I will say this: they are starting to go live. They are starting to make you go into a live account. Some of them, I think, like Top Step makes you go into a live account after like 5 payouts or something like that, which makes sense because it's like, how long can that Ponzi scheme go before you eventually have to move a trader to a live account?
Forex or commodities. And that's where prop firms came in. A prop firm is essentially a company that gives traders access to large amounts of money so that they can trade without using any of their own. The idea was simple. If you're a good trader, the prop firm lets you trade their money. And if you make profits, you get to keep a percentage, and that's usually between 70 to 90%. And the firm takes the rest. And if you lose and blow up the whole account, you don't even owe them any money. You just lose access to the funds.
Okay, so you don't blow the whole account. They give you like 5% or something like that risk. So like, let's just say you have 100 grand. If you lose 5 grand, you're done. You know what I'm saying? You so it's like, you don't, like, that's when they say blow up the account. Like, you're not actually losing 100 grand. You're losing like 5 grand, and they give you a simulated $100,000 account. But like a real prop firm, like, let's say I think it's like SMB Capital. They have some YouTube videos I'm gonna react to as well. But they're like one of the old prop firms that are like, or they're one of the few prop firms that are still around that have the old business model, where you're trading live capital. You know, a majority of the things are provided for you in the right way, like performance coaches, risk management team, all that type of stuff. You know, guidance, mentorship, all that stuff is done. But you gotta be a go-getter to go there. And I think they only do stocks and options. I don't think they do like futures and FX or anything like that.
Now, early prop firms were on Wall Street, where only elite traders.
There are prop firms where they want to be on Wall Street.
Could get access to these kinds.
Like Chicago. I know they had something like, I think like it's somewhere in Texas. I don't know if it was like Dallas, Houston, or Austin, but I know they have some in Texas. They have some in LA. Like the major hubs, they usually have some type of prop firm and stuff like that. But like I said, if you don't live in a major city back in the day, you weren't gonna have any access, and especially like Chicago and New York. But you know, there are other little brokers in major cities and stuff like that, because, you know, I mean, when you have major cities, I mean, there's going to be people that want to invest. So I mean, the business was there. So yeah.
Of funds to trade. But as the internet grew, prop firms started going online, which meant that suddenly an average person just sitting at home could apply to trade with prop firm capital. Now, don't get me wrong, trading isn't just about making money, it's content. In the 2000s, if you wanted to learn trading, you had to read boring books, pay for expensive courses, work at a financial firm. But now with the
Nah, that's not true. I started learning about trading, like I said, when I was a freshman in high school. This was like 2007, 2008. And I was in it on like chat rooms and stuff like that. Like, I don't know if I was using Reddit back then. I may have been using Reddit, but I know like 4chan or like there was like different like websites that had like trading forums and stuff like that. I hate forums, man. Like they get so confusing after a while if you're not careful. But anyways, you know, I learned that way. I met a guy who traded in you know, I don't know if I'm gonna say where I'm from yet, but anyways, I met a guy who traded in like our I'll say in my town. And he taught me a lot of stuff, you know, just reading books and stuff like that. So I don't think you had to read. I don't even say they're boring. I mean, I love trading, so I won't even say it's boring. But man, courses are always going to be expensive. And we're gonna have financial friend.
The help of content, you can just go on YouTube, TikTok, or even Twitter and watch traders breaking down things like chart analysis, trading strategies, how much money they made or lost. And some of the biggest trading influencers became readily available in just a few button clicks, who started teaching their own concepts. People started trading while streaming on Twitch, and then there were trading discords with thousands of members. Platforms like Twitter and Telegram became free trading communities. So trading went from a physical marketplace in ancient times, a financial system controlled by banks, a game for hedge funds, and turned into something that literally anyone with internet access can now do. The barriers to entry in trading has become lower than ever. Anyone with a phone, Wi-Fi, and a bit of knowledge has been able to get started. But of course, this access comes with risks. So there's now more scams and fake gurus than ever before. Social media hype had made trading look easier than it ever really was. And then of course, we have the fake guru.
Man, I'm gonna keep it a bug with y'all, man. Trading is one of the hardest things that, like, man, actually, you know, it's like sometimes it's like you hitting and it's like you can't lose. You know what I'm saying? Like this morning, like I was going through it. I was getting hit left and right, man. Like my stops just kept getting hit. And I was like, oh my God. And then yesterday I lost money. And I was like out like 3 weeks without a losing day. And then yesterday I lost money in the streak. And then today I was losing money, and I ended up making money towards the end. Like the markets really start to move for me. But like, man, when the markets are dead, like I struggle because my stops are getting hit left and right. I'm getting hit at break even left and right. And then I can't get a runner, you know? And then this morning I was just like, I was getting hit, man. I was like, man, I'm going into depression. Like, I was just like, what the heck is going on? Like, oh man, I won't say that it was like, yeah, I will say it was bad. I was just like, man, what am I doing wrong? Like, I was like, what more do you want from me? But anyways, like, you know, I'm a volume trader, so it's like I just got to keep pushing that button. And so anyways, I ended up making money today. It wasn't anything crazy, but you know, profit is profit, and especially after yesterday. So I made it for like half the losses I had yesterday. So that's why I got to trade again soon at 9:30. So anyways.
Epidemic. Social media had created a new breed of influencers.
You know what? We're gonna end this video here because this is getting pretty long. This will be part 1. Please like, comment, subscribe. I hope you watched the whole video. I hope you like my little rants and my little icebergs. But anyways, see you guys in part 2. Peace.
Man, even Jesus had a shooter, and God be having unbelievers that didn't mess up their demeanor. And yes, they know it's hard, they know, cause when they be up in those trenches, man, they show out. But what they do